Hey YouTube, welcome to this channel and don't forget to subscribe and hit the notification bell on to get the latest update on stocks and their analysis. And watch this video till the end before making any decision. So today we're going to talk about EVGO, a largest public fast charging network, and it's going to merge with CLII. The sector is thriving, product looks good, so let's talk about if this company is going bankrupt or is going to the moon. So before digging deep down the merger specific details, let's talk about the company itself. EVGO is an EV charging company which is a subsidiary of LS Power, which offers electric power distribution, electric storage, transmission and similar things. They are going to merge with CLII, its climate change SPAC company, and EVGO is going to get more than 500 million through this merger. The enterprise value is 2.1 billion and at current price the market cap should be 5 billion. The company has not provided the debt information, and at this point I think it's impossible that the company has no debt and they are hiding it. It's not a good sign. After the merger, the company would have 575 million of cash, which they claim that would be enough for them to survive until 2026, and they are aligned with Biden's climate policy, so I don't think they are going to be bankrupt. The cash flow condition is not that good and they are expecting a positive cash flow in 2026, and we have to wait at least 5 years to see positive cash flow. The revenue expectations are so high, they are going to double up their revenue every year, and if they beat their revenue expectations, I think then they are going to the moon. So let's talk about the product. They have a DC fast charging network and there are two types of chargers. One is 350 kilowatt, the other one is 50 kilowatt, and if you are going to charge your vehicle on 50 kilowatt charger, your vehicle would be charged in 30 to 60 minutes. Otherwise, if you are using 350 kilowatt charger, it's going to take 5 to 9 minutes only. That seems interesting to me. 5 to 9 minutes is a reasonable time. If they are successful in installing their charging network throughout the country, their revenue will definitely increase. To attract the customer, they are also providing a web and mobile application to check the nearby station and if sockets are available or not. Furthermore, the company has more than 800 DC fast charging sites and more than 1400 DC fast chargers and even more than 220k active customers with more than 150 monthly active chargings. They are working in 34 states as well, and they are also good at building corporate relationship. They have planned to install more than 700 Tesla connectors, and with GM they have contracted to install more than 2700 charging stations. They are in collaboration with big giants like Nissan, Uber, BMW and Lyft as well. I'm very positive about the management because the leadership will remain intact, and Kathy Zoe would be the chief executive of the company, and she has a lot of experience in EV market and green energy as well. She was a partner in Silver Lake, has worked as a chief staff in the White House Office of Environment Policy, as well as she was also Assistant Secretary of Energy Efficiency and Renewable Energy in the Obama's administration. She was also hired by George Soros and Silver Lake to work as investment strategist for energy and resource sectors. Not bad connections, I would say. If we talk about industry, the EV box and charge point are the key players in this industry, but their business model is not same. EVGO is operating their own charging stations, unlike ChargePoint, which is actually charging stations as a service model. So if we talk about valuations, EVGO would be 5 billion market cap company, ChargePoint would be 11 billion and EVBox would be 3 billion. I think EVBox has potential, but it is not a small cap, so I'm not expecting a fast growth from this company. So time for the conclusion. I don't like the company is not showing their debt information. Number two, the cash situation is not good. If we talk about the negative cash flow, this company is not gonna generate positive cash flow for the next 5 to 6 years, which is a long time, I believe, and the slow growth is expected because this company has to install their physical units, which is quite expensive. I don't think it would grow like a tech company, but if we talk about the industry, which is thriving, it's a good sign. If we talk about the management, I am very much positive about it. Strong corporate relationships, no doubt they are very beneficial, even though the business model is expensive but profitable in long term. I'm not worried about the company would go bankrupt because government has a clear vision on EV, so these companies would get benefit obviously. Despite all other factors, I'm expecting 2x from this stock within a year. So that's all my friends. If you really found this video informative, don't forget to subscribe and hit the notification bell on and comment down below what are your views on this stock.